Awesome. Hi, everyone. Welcome to Gold House's first demo day on Stonks, a platform which we love. I'm Zara. I am here to moderate this demo day and just share a little bit more about, of course, our excellent panelists that we have with us and Gold House. Gold House Ventures is the preeminent Asian and Pacific Islander focused fund and first venture fund led by a nonprofit general partnership that enables shared access across the venture ecosystem. Gold Rush is part of Gold House, and it's an immersive 12-week program offering targeted masterclasses, one-on-one advising, and a tight-knit community of Asian Pacific Islander founders to collaborate with one another. This is the first demo day we've done of Gold House Ventures and Gold Rush, so we're really excited to be doing this, and we're thrilled to have our incredible panelists with us. We have Sutian, who is a partner at Multitudes, Ali, who is the founder of Stonks, the platform you're watching this on, which is incredible, Eric, who is a GP at Gold House Ventures, and Pocket, who is the co-founder and managing partner at SoCal. Thrilled to have all of you here. We are going to bring up the first company, which is Fandid, and its founder, Travis. So Travis is going to bring you up in a second.
Hello. Can you guys hear me okay?
We can.
Awesome. Great. Thank you so much for having us. My name is Travis Trejo. I'm a singer, songwriter, and music producer with over 300 million Spotify streams and over 75 million views on my YouTube channel. And I've been able to coach some of the biggest and brightest artists that are up and coming in this industry. But despite all of that, it's harder than you think for artists like me to actually make a living with music. On one hand, we get paid a fraction of a penny for streams, and recording contracts literally make you give up all your rights and ownership. On the other hand, we could launch a Kickstarter or a Patreon, but end up spending more time actually fulfilling the perks than creating the art. You see, the irony here is that our superfans are looking for more ways to support us and get involved. I've been asked so many times, how can I support you? But artists are working long hours as baristas, cashiers, and as gig workers while surviving on Medicaid benefits just to get by. With the recession looming, it's about to get even harder for creatives to get through this economic time. So that's why we're building Fandid, the platform for creating the world's best fan clubs. Fandid's mission is to reduce the financial suffering for independent artists and creators by allowing their fans to fund their career. Not a label, not a production company, they're super fans. Think back to when we were kids, right? That warm and proud feeling of being a part of a club, being a part of something bigger than us. That's what we're bringing back for creatives. Superfans can pay for memberships that make a creative's career not only possible, but sustainable. And as part of the club, they get access to amazing benefits like VIP meet and greets, limited edition badges, or album collectibles, which Fandid all takes care of. You see, the main question that we've been asked so far is, how are you different than the competition like Patreon or Kickstarter? And the answer is really simple. The number one complaint amongst the independent professional artists and creators that we've spoken to claim perk fulfillment as one of the main blockers. Fandid gives the artists back their time and freedom by automating these perks for their fans through album collectibles, early access to tickets, and discount codes to some of the artists' favorite brands. Thanks to being in this industry for over 15 years, we've been able to build a wait list of some artists who are incredibly excited about this new model, including artists like AJ Raphael, Anna Akana, Wes from Wongfu Productions. And we already know that Fandid can go beyond creatives to creating tribes for nonprofits, restaurants, businesses, and more. So if you're interested in learning more or joining the movement, email me, travis@fandid.com. We'd love to speak with you. Thanks.
Thanks for that, Travis. That was fantastic.
Thank you so much.
I'll hop in with the first question. Going back to the competition, you mentioned that you automate a lot of the perks and the rewards benefits. Can you go into a little bit more detail about how exactly you do that?
Yeah, so I've been a part of Patreon and Kickstarter since like their betas, and I've run multiple campaigns with all of them. And so the thing that we learned about musicians is that a lot of these perks are taking time away. So we're doing things like passive perks, like discounts and early access tickets, the things that really the fans want. And we're really focusing on those things, like brand affiliations as well with other API businesses and whatnot, to really make it easier for the artist. So really like things like having to make a song for a subscriber or things like that. We're nixing that because it just takes up too much time away from the artist. So really practical things. And then we're aggregating their merchandise and working with drop shipping to automate their merchandise to their fans.
Got it. So just to clarify, one last question. So it sounds like you are eliminating some of the more complex perks in the platform and just only offering the simple perks?
Correct. Yeah, exactly.
Got it. So I guess, could you on Patreon only offer simple perks as well? Or do they not allow that and you have to have the whole menu of perks?
No, they definitely, you can do that. I've done that before in the past with mine, and some of those perks don't really do too well because a lot of people are looking for kind of that transactional thing, that time spent. So you definitely can do that. But for us, our mission and vision is about creating kind of a passive, annual subscription for these fans to participate, but also not have to allow the artist to, live so much. So you can definitely do those on Patreon, but we're looking at this as more of the branded club for the artist versus a platform alone.
That's awesome. Thanks, Travis, for sharing. Can you talk a little bit more about the business model and how Fanded itself makes money?
Yeah, so we're actually launching this with my fans in about a month. We take a percentage off of the memberships. We're still playing with that a little bit. We're looking at other ways to maybe monetize, but initially the idea is 1,000 true fans that buy $100 membership, $100,000 of funding or capital for the artist, and we would transact off of that. Some other pricing tiers we've seen, are like 12% of the entire subscribership. If it's underneath a certain tier, so if it's underneath $30,000, then maybe we'll take 12%, and then as it moves up, we'll lower the percentage.
That's great. Thank you.
Thank you.
Travis, I think it's really refreshing that you're talking about musicians and fans without talking about Web3 and NFTs. So I appreciate that. And I also really like the background. It feels like you're recording a song for us. So I am curious, what's the traction so far from the artists? I know they are already probably juggling between different platforms. So how does it feel for them to, have to build something somewhere else? And how do you get that transition smooth?
Yeah, no, thank you for that, Pocket. Really appreciate it. The main thing that we want is for this to fit into the normal journey of the artist, right? So we don't want artists to take away their time from doing anything else. So we've actually have about 50 LOIs signed by artists within our network that are excited to try this. And so the idea really with this is to not have to distract the artist from building on another platform, but fits within what they're already doing, by allowing their super fans to be a part even deeper. So that's kind of our mission, just fit right into the journey of the artist, especially the independent artists, because independent artists are completely different than major label artists as well.
Thank you.
This looks really cool, Travis. My last startup was in the creator tool space. So we built like a Patreon for live streamers on Twitch. So it's really cool. Merch is certainly like a big part of this. It's a big revenue stream for a lot of the YouTubers and big creators. So excited to see where you go with this. It feels like the devil is in the details in this space. There are tons of startups in this space, creator tooling, and so I'm like curious to see what how this will go once you roll this out, right, to other creators.
Yeah, absolutely. Thank you so much, Ali. Yeah, we're excited too. We've just to kind of go back to Pocket's, question or thought about Web3. We were focused on that for a while, and we realized the main thing that fans wanted was, community around their interest. And so we're excited to see that as well. And especially, from learning like NPC technology, we didn't have to go through the NFT route in order to create community for artists. So we're excited, and we hope to show you guys as well soon.
Awesome. Thanks so much, Travis. I am going to bring up Lily from Demi next. We are on schedule, which I love.
Awesome. Hi, everyone, and thank you for being here. My name is Lily, and I'm the CEO and co-founder of Demi. We're here today to share with you how we're bringing technology to the composting industry so that we can build towards a food waste-free future. It's time for a food waste revolution. The carbon footprint of food waste in the US is larger than the entire airline industries. Demi is on a mission to create a healthier planet by making composting mainstream. We're introducing modern technology to the fragmented and antiquated composting industry by partnering with residential and corporate buildings to take the mess out of composting for the 40 million Americans who live in apartments. We provide urban residents with tech-enabled solutions from sleek bins to smart collection stations and a mobile app that all work to cultivate an entire culture of composting. For building managers, we offer a data-driven amenity that improves a building's net operating income, asset value, certification eligibility, and customer satisfaction. We charge a flat rate to the building, and interested individuals can then opt into our services at no additional cost. The composting ecosystem today is fragmented and highly manual, with hyper-local solutions that primarily service single-family homes. These tend to be logistically cumbersome and grassroots-led organizations that may lack the technological expertise, business savvy, and real estate connections to build a B2B SaaS platform that can scale nationwide through property management networks. But as an experienced group of passionate technologists and business builders, our team can change that. There's a $26 billion opportunity in the residential building market alone, and food waste is a $2.6 trillion problem with only 3% composted in the US today and significant industry tailwinds. Since our team came together in March, we've seen strong initial traction. We've completed our first pilot with a condo building. We've grown our waitlist to over 100 individuals, and we're on track to land a second partnership by the end of this year. We have a unique opportunity to create widespread change, but we need your help. We're about halfway to our fundraising goal of 500K so that we can transform the way that we as a society approach food waste. Because we believe big impact starts with small choices, and a food waste-free future begins with Demi and with you. Thank you for your time, and I'll invite my co-founder, Andrew, to join me for any questions that you might have.
Terrific. Great presentation. Would someone else like to go first, or I'm happy to jump in?
Eric, why don't you go first?
All right, I'll kick it off again. Thank you again for sharing that. What a great mission and something that the entire planet needs. I was struck by your low costs compared to the competition, yet you offer so many services with the bins, with pickup, with the software as well. I'm curious how you're managing to keep the cost so low when it would seem like your fixed costs and even variable costs are higher than the competition, given you are offering more services.
Yeah, it's a great question. So the primary way that we're able to keep our costs low is because we're aggregating across all of the residents or customers within a building. And so because the building would be paying for all of the residents, regardless of whether or not they're actually opting into our services, we're able to charge a larger upfront fee and then keep our costs relatively low while we're maybe only servicing about 55% potentially of that building. Are you guys still able to see my slides or no?
No.
Okay. Yeah. So essentially we're servicing basically a B2B2C model where we would be contracting with the building. Sorry. Thank you. We're contracting with the building and then they pay for the entire building, all of the residents, regardless of whether or not they actually are being serviced or using our services.
Got it. Whereas the competition does direct one-on-one deals with individual people.
With residents. Yeah, exactly.
Okay. So there's a innovation on sort of your go-to-market sales strategy here.
Yes, exactly.
Got it. Thank you.
Yeah, Lily, great presentation. I compost too, and
Awesome.
love that you're doing this. And really smart go-to-market, as Eric mentioned. You mentioned you're live in market with a pilot. What's the feedback like? Is it one building or a couple of buildings that you're live with? How many units are using this? Are they paying you?
Yeah. Andrew, do you want to take that question?
Sure, I can talk a bit about the pilot, Ali. Yeah, great question. So the pilot was more of a temporary learning experience for us. It was kind of set to just last 1 to 2 months. We rolled out a pretty low fidelity version of the product because we landed the pilot before we had any funding. So we were just testing initial hypotheses. We had low fidelity versions of the bin. We had a collection station that was really just a plastic container. But it was a really, really good opportunity for us to kind of define what is our early target adopter. So we've kind of narrowed it down to these apartment buildings and condos. And we've improved the product since then, have raised a little bit more funding thanks to Gold House and Gold Rush. And we're ready to close on a second pilot with an improved version of the pilot.
I'll just add that it was a 10-unit condo building and they did pay us for our services. So they paid the full $15 per unit per month.
Yes.
That's great. Thank you.
That's great. Thanks, Lily, and thanks, Andrew. I'm curious when you, I know there's one pilot to date, and I'm sure you guys have talked to a bunch of other buildings. But I'm curious, when you talk to the building managers, what's the most compelling part of the Demi value prop? Is it the amenity that they add for their tenants? Is it the fact that it is more environmentally friendly? I'm sure it's a lot of different things. I guess.
Yeah. So I think the most important thing that we've heard from building managers, their top priority has really been a financial incentive. So we're essentially reducing the amount of cost that they would be bearing for traditional waste management, which is something that they pay thousands of dollars. And so we would be reallocating some of that budget towards an initiative that is more sustainable, helps them become eligible for certifications like LEED and WELL, while also allowing them to attract, more sustainability-minded tenants, potentially increase rent revenues that way as well. But this is a cost that they are already, taking on for traditional waste management. They're also spending a lot on labor, on maintenance, for pipes that might get clogged because food waste is going down. And so we would be reducing a lot of costs on the maintenance side, the traditional waste management, and then labor as well.
Right. And we've also spoken to some property managers who have said that they've had directives from their corporate offices to specifically look for sustainability initiatives. So that's been a strong push for us as well.
So I'm curious because I think the slides went by really, really fast and there was a lot of information. I'd love to learn a little bit about the two of you's background, why you wanted to do this. And I'm also wondering, so for building managers, do they manage compost and say other, paper recycling or other mixed container recycling? Are these all managed differently? Are you only taking on the composting part? So do they want to manage multiple vendors for waste management?
Yeah, so they traditionally already manage multiple vendors for waste management. They'll have one for traditional trash, one for recycling, one for paper recycling, and then we would just be in a completely separate one for compost. Except our solution is really all inclusive, where we would be handling, everything from the bins to the containers to the pickup to the mobile app. And so it's a more holistic solution than some of what's out there today. And in terms of our backgrounds, I have been thinking about food waste my whole life. My dad was sent to the Cultural Revolution to the rice farms during the Cultural Revolution in China. And so it was always all about mitigating food waste. I grew up composting and then experienced the struggle myself as I moved into an apartment and realized how difficult it was to compost in small spaces. Andrew and I we met at business school, so we're completing our MBAs at the University of Chicago, and we'll be working on this full time.
Awesome. I think we have time for one more question, but we'll just keep it short.
Yeah, would love to understand just your rollout strategy. This seems like a hard thing to scale. Lots of logistics, lots of labor and resources involved to scale. So could you just share a little bit more about how you continue to roll out and acquire new customers?
Yeah, sorry, just to clarify, was it my role in the strategy?
Your rollout, your growth strategy.
Our growth strategy, got it.
Just because you got to buy trucks, got to buy bins. There's a lot of things you got to create and build in order to acquire new customers. So I would love to understand how you plan to do that.
Yeah, 100%. So in terms of the growth strategy with acquiring the buildings, we're primarily trying to go through national property management companies that may already have a large portfolio of buildings across the nation. And that will allow us to kind of become a preferred vendor with one of those property management companies and then scale quickly into their portfolio buildings. And then in terms of the logistics, we're looking to partner with a third-party logistics company that, as we scale, can help us with some of the pickups and drop-offs, courier services, things like that.
Right. Something we like to say is our core business is the first mile of the logistics. So getting people from their apartments down, just composting in general. We're not really focused on the last mile logistics, which is a bit more solved. There's a lot of micro haulers within most cities that already do the hauling. So we would like to partner with them to kind of outsource that. And so we can focus on our core competencies.
Great. Thank you.
Okay, awesome. Well, thank you so much, Lily and Andrew. And next up, we have Folio with Amy.
Awesome. Hi, everyone. Thank you for being here this afternoon. I'm Amy, and I'm the CEO and founder of Folio. So every year during Thanksgiving, my husband and I go to Italy. We've stayed at the same hotel for the past 5 years. And this year, we're also taking our 7-month-old baby with us. So I went on Airbnb to find a bigger space with a kitchen and laundry. The first thing I filtered on, it wasn't price, it was reviews. I was willing to pay a higher price for a place with good reviews and lots of ratings. And my story isn't unique. Hundreds of millions of travelers stay at over 6 million vacation rentals every year. A rental needs to stand out to stay competitive. And having one bad review on a booking site like Airbnb or Vrbo can put a property out of business. So much so that desperate hosts will often delete listings and start from scratch. Luckily for them, there's Folio. Folio is the perfect solution for the next generation of hospitality, where high tech is the new high touch. Our platform creates digital front desks that's everything but the desk. They are property-specific web apps that not only share information and recommend local activities, they also support guest transactions for add-on services like late checkout or hiring a private chef, and can automatically respond to guest messages. For guests, it's a simple singular touch point for everything they need in their stay. A huge upgrade to the sticky binder that we've all avoided touching. The short-term rental market is quickly professionalizing, but it remains very fragmented. Nearly 80% of property managers manage less than 100 units each. But this is also a huge industry where they spend nearly $10 billion a year to promote and run their businesses. Our customers pay a subscription fee for each front desk app that they set up. Additionally, Folio gets a percentage of guest transactions on each app when that feature launches in early 2023. In the past year, we've gained strong traction and are on track to double our MRR this quarter. Our hope is that in the future, people will be filtering for properties with Folio app when searching for their next perfect getaway. All right, thank you.
Terrific. Thank you so much for that. Someone else like to go first, or happy to fire away again?
Sure, I'm happy to do it. Amy, great presentation, and you're making Airbnbs more reliable.
Yes.
Easier to manage. And I have a bunch of friends with Airbnbs, and they complain about this stuff all the time. It's like so much work, and property management is expensive, but like you kind of have to do it, and it's a lot of work to manage these things. So
absolutely.
So good problem to go after. Can you talk a little bit about sort of the early customer feedback and traction you have so far? I think you had numbers on one of the slides, but would love to hear more.
Yeah. So we currently support. Sorry, let me go back to the traction slide. So we currently support property managers that are independent hosts, so they manage one property all the way up to hundreds of properties. Our ideal customer is they manage between 10 and 50 properties. We find that way they're growing very quickly, and as they add to their rental portfolios, they get additional front desks through Folio. So we get our revenue is able to grow alongside with them. The feedback has been absolutely wonderful from both the property management side and the guest side. We've had nearly zero churn. I think it's less than 3% over the past year.
Got it. And the 500 apps in use, how should we think about? Is this 500 property managers that are using you?
It's 500 properties. Some property managers will create one app for one property or one app for multiple properties. Some will create two apps for one property, but on average, it's one property per app. Got it. This is great. And what do you charge them? Right now, we're charging $10 per app per month. That does decrease. So our largest property manager pays $6 per app per month. Thank you.
Amy, I'm curious, what are your plans for future product roadmap? It sounds like this is such a great experience for both property managers and also short-term tenants, in terms of having all the information on hand. But I'm sure, in the course of staying, or at least my experience has been in the course of staying at Airbnbs and stuff, sometimes things come up and you need to contact people for an immediate answer. Do you have plans to start integrating some sort of, real-time communication tool? I'm curious how you're thinking about that.
Yeah. So right now, the apps provide property information and recommend local activities. We're building out the transaction platform that allows property managers to sell upsells. And then next will be the automated message responding. So they can respond through our platform, and our platform will use conversational to cut down some of that back and forth. We do have integrations planned with other property management software companies. We're launching 2 integrations this month and have 4 on deck for the first half of 2023.
Got it. Cool. Thank you.
Yeah.
So, Amy, I have a question. So, what is the key capabilities that you're building out for like local recommendations and these responses and information gathering? Like, what is the core barrier to entry, and how would you grow from here?
Yeah, so our platform is, we have self-service features. So that's what we have developed in the past 6 months. So property managers can set up their own decks without manual intervention from Folio. And as we add kind of more modules, they can pay for the additional modules to help support their more manual operations.
Got it. And so far is the digital folio and also the local recommendations, is this enough to, I guess, turn the reviews that could have been bad into good ones? Or like, what is the key here?
Yeah, so the key is getting the information to the guests before they ask for it, right? So that way the property manager receives less questions and the guest feels like their needs are met. So with our platform, you can actually send the link to the digital app before the guests even arrive. So they're able to get familiar with the property and the surrounding areas before even arriving. And then they're also able to kind of take it with them outside of the house, which you can't really do with a physical binder. So that way it's like a concierge in your pocket, and it's always available to you.
Awesome. Thank you so much, Amy. Up next, we have Sonal and Kai of Nama.
Hi guys, I'm Sonal. I'm the CEO and founder of Nama. A few years back, I was going through the process of getting a mortgage loan. It took me 2 months. I was going through a milestone in life. It took me 2 months with all the paperwork, even though I had a fantastic credit score and a really, really good income to back it with. And I realized that all of us have money that's sitting in our networks. My uncles in the US have money sitting in their bank accounts. My friends have money. And I found it so awkward to even ask them for a loan. I wanted to pay them back the same way I would have paid back a bank. So that's what we're doing with Nama. We want to build a world in which we can actually leverage our family and friends directly as a source of capital, and then eventually investment. Now, we launched last year, and we have an MVP product that does loan contracting and reminders, and our traction is as follows. So we have almost $3.8 million that we have done so far in loan contracts. These have been done with, our customers have contracted with people who are in their network, like their siblings, their parents, their family, their friends. And these loans have been made to each other for the sake of, starting a business, or for borrowing for for buying a home, or for any real estate transactions. And our customers are reaching out to us, and they've been asking for more. They want to use this method as a more formal method of, directly accessing this amount of money from their network. They want to be able to build credit with these transactions. They want us to do automatic payments for them. And they want us to also go ahead and help them reamortize the schedule every single time they pay back. Now, why is this the best time to do this? Like, we already know the generational wealth gap is at an all-time high. The younger generation is looking for access to more affordable loans so that they can also get a step up and use this, as a bench, as a point of getting higher, getting better in life. But the thing is that this platform allows them to borrow this, money from their network with a lot of dignity, and also use their social capital. Now, our team is, already well experienced to do this. We have a very good entrepreneurship background. We have many years of experience in product and engineering, and also in finance. And we've done so much with Nama in only very little time with very little investment. So we want to build a world and imagine a world in which you can approach your family and friends as the first avenue for capital, not the last. Thank you.
Terrific. Thanks so much for that. Oh, looks like we have two people.
Yeah. I'm the co-founder of Nam as well, Kai.
Excellent. Thank you guys so much for that. I'd love to understand from the end user perspective, what are the main pain points that you guys are solving? Because the awkwardness, the social awkwardness of having to reach out and ask, like that still exists with this platform. Sort of the risk and the payback, the financial risk still exists with the platform. Is it really just organizing the dollar amount and the payment schedule? Is that the bulk of the value prop for the end user?
Yeah, so there are different end users, right? For us, there's a borrower, there's a lender, right? So let's talk about from a borrower's point of view. So what we are trying to solve is not just removing the awkwardness of asking, but because they are going to be able to, so we also want them to be able to tap their network, and we want to be able to reach out to their network on behalf of them, right? And also help them provide all the financial support that they would generally provide to a bank. Like, I'm going to give my pay stubs, I'm going to give more information if my network is asking for it. So it's the awkwardness of asking, which is actually the biggest hindrance. And then, of course, the fact that I'm willing to provide, formality and a written commitment to someone. Also, I'm willing to go on the line and report every single payment to the credit bureaus, and therefore be able to say that, I am putting my, my credit score as well on the line here. So pretty much imagine that every single formality that happens between you and a bank, we would like to provide between your network. So that's what they're doing. And they're getting access to a much cheaper rate from their network.
Got it. So it's the data room, it's the integration with the credit bureau, and then you communicate with the lenders on behalf, so they're not doing it directly.
Correct.
Yeah, and also it's beneficial for both, I would say, a borrower and a lender, because for borrower, they can get a cheaper rates other than going to a bank, given the rising inflation rates in the market right now. And also for lenders, because they have money sitting in their checking account or saving account, let's say Chase or BOA making 0.03%. But then if they lend the money or spare money to their friends or family, they can at least make 2% or something. So I would say it's more beneficial. And then our goal is really to decentralize, to cut off the middleman, which is bank or financial institution. They're trying to make a fee in the middle of the process.
That's great. Thank you. I'm curious, since so first, congrats on all the traction today. It sounds awesome. It sounds like you've helped a lot of people. Can you talk a little bit about the sort of rates that you're lending at? Who decides that, right? How do you figure interest rates? And then additionally, just given the amount of loan origination that's gone through the platform to date, I'm curious, can you talk a little bit about the experience of the lender and borrower? So has there been any defaults? How do you handle that? Is there recurrence in terms of lenders and borrowers coming back? All that, all those juicy stats.
So this space is actually quite interesting because it's not like your private lending market. So 1% is the median rate at which people are lending money to each other. We don't decide that. The lenders are deciding that rate. The lenders and borrowers are mutually deciding that. Of course, the government does have some, guidelines on it, which we are, letting the lenders know that they should be following those. So that's that. In terms of the network effect, yes, we have had repeat customers. We've had people who have come in and become lenders again and again, people who have come in once as a borrower, the second time they came in as a lender, and so on and so forth. And they've also pulled in other people, like the second time around, the third time around. So that's already happening. And I've forgotten your second question.
I forgot my question as well. So that was great. Thank you.
Sorry.
My question would be, do people want to share their financial info to their friends and family? And how are you asking on their behalf? Like, how do you onboard their network? Is it through a link? Is it through an app?
Yeah, so they are willing to share a lot of information with their friends and family. And we've actually had our customers give us that feedback. And so there was one instance, for example, this woman, she wanted to get a loan, but she wanted to actually sign a contract, even though she was offered a loan without a contract. Somebody offered her a $300,000 loan to buy a home. And she came to Nama and she said, I want to borrow with dignity. I'm going to sign a contract. So currently, they actually reach out to each other. So they come in and they either as a borrower or a lender, they can start the process, and then they notify the other person through Nama. So Nama reaches out to them because they give us their email address, and therefore we make that connection on their behalf, and they can come in and say whether they want to accept the offer or reject the offer, and that's how it works. So we've had that network effect, and we want to continue with that because every single time somebody comes in, we want them to be able to reach out to 4 or 5 people from their phone book and therefore attract more people to the platform.
Okay, awesome. Thank you so much. Next up, we have Kelly from Impact.
Hi, I'm Kelly, co-founder and CEO of Impact Food. There's nearly 8 billion people on this planet, and we all need to eat. Today, our food system has used up 90% of global fish stocks to meet high seafood demand, causing biodiversity loss and destroying ocean ecosystems. When I began transitioning to a plant-based diet 2 years ago, I could not find any delicious, nutritious, and affordable alternatives to animal meat. The few products on the market are mostly breaded, fried, or minced seafood, with no whole cuts of fish. As more consumers are seeking sustainable seafood alternatives, we have a multi-billion-dollar ocean of opportunity. At Impact Food, we developed a novel food technology platform that texturizes and flavors plants to produce whole-cut seafood that performs just like its animal counterpart and is price competitive. When we realized there is less than 3% of bluefin tuna left in the world, we made our first product, plant-based raw sushi-grade tuna. Our technology creates the umami taste, nutrient-rich protein, and melt-in-your-mouth sensation of fleshy tuna meat. Our proprietary formulation and production process is adaptable to other types of seafood, so we can replicate different cuts and species. In 2020, I was studying business at UC Berkeley Haas and met my co-founders, a biochemist and a computer scientist. We combined our fields of expertise and recently brought on an experienced director of engineering, along with these talented advisors and investors to move our vision forward. Though we started out in our DIY bedroom and kitchen labs, we have moved into a partner pilot facility in San Francisco to scale up for commercialization. We have several chefs and restaurants interested in our bench scale product and have signed our first Bay Area customer to market test in early 2023. We're officially opening our seed round and are excited for you to eat Impact Food. Thank you.
Great presentation right as we approach lunchtime. Very timely.
Thank you.
Ali, I know you didn't get to go last time. You wanna kick us off?
Still thinking if anyone else wants to kick this off.
Sure, I'll jump in. I'd love to understand your go-to-market strategy. Are you going to distribute through restaurants and be a supplier to them? Are you going to direct to consumer? Is it going to be something that we see at the grocery shelf lines? Is it going to be in the frozen food aisle and the fresh food aisle? Tell us a little bit more about how you're going to bring this to the customers.
Yeah, for sure. We're starting out to go to market through food service just because we're seeing that that's where consumers are most frequently eating seafood is out of the home and specifically at restaurants. So we did a lot of customer discovery where we went to various different types of restaurants from sustainable eateries to sushi restaurants, some higher end omakase, and also fast casual seafood. And just to test out, have them give us feedback on our product and see where the market is, what the reception is. And we think that with food service, starting out with restaurants, they can really help us to be the early brand ambassadors for our product. And that's why we're going to be starting out our market test in Q1 next year with a fast casual Bay Area seafood chain. And then from there, we'll be expanding to other channels like retail and other mass market once we get some more market validation and prove out the market there.
That's great, Kelly. Can you talk a little bit about just margins on the product? So what are they like today? How do you see them changing in the future?
Yeah, right now we're aiming for a 40% target margin, which is already pretty significant in the plant-based and alternative protein space because most products, they have really high COGS, and as they scale, of course, they'll get closer to price parity. But because of our specific process, and we've brought on a process engineer that has helped us to figure out how to scale our process much quicker, cheaper, and more efficiently than we had initially anticipated. So we'll be able to get get to large volumes very quickly. And so as long as we align that with the market velocity and our sales, we'll be able to continue to make progress and traction in that sense and be able to get to parity from the get-go. So from the beginning, our COGS will be able to allow us to produce seafood much cheaper than conventional seafood prices are very volatile. So they can range from like $15 to hundreds of dollars per pound. And for us, we're working on a fresh, good quality seafood cut, and we'll already be able to have really high margins just based off of that price parity that we can achieve from the beginning.
Could you tell us about, so for the current plant-based seafood options, how are they made? How are they processed? What are the ingredients versus impacts?
Yeah, for sure. So most of the plant-based products out there, especially in plant-based seafood, are usually grounded or extruded products. So most plant-based products in general too, like the Impossible Meats and Beyond Meat, they're all extruded products. And typically in like a ground meat or in seafood, it's typically more the canned tuna. And they also have a strong protein source, like a pea protein or soy protein that often has an off taste that they need a lot of other ingredients and flavor maskers to negate those off notes. And with our specific process, it's pretty clean labels. So we have under 10 ingredients compared to some ingredient lists that can be really, really long, as you might have seen at the grocery stores. And so with our process, we're able to get this like clean label product that is made primarily of algae, pea protein, and vegetable juice for the coloring. And our product is very comparable to conventional seafood as well.
Thank you.
Kelly, thank you. This is really cool. I'm curious, what compelled you to start Impact Foods now?
Yeah, for sure. Like we're just looking at the food system right now, and it's really alarming that specifically with seafood, there may be a day that our oceans will be completely empty. And so I started transitioning to eating more plant-based, and I was just looking for more options, and I really couldn't find any out there. As I was mentioning, most of the products are fried or breaded, minced, canned tuna, and to have a whole cut alternative that didn't yet exist. So we decided that we needed to do something about it, and we could use science and food technology to create this delicious product that can provide that same realistic seafood experience that doesn't yet exist.
Thank you.
Thank you.
Awesome. Thank you so much, Kelly. Next up, we have Meg from Symphony.
Hey, how's it going, everyone? I'm Meg. I'm the CEO and co-founder of Symphony. Symphony is essentially a one-stop shop marketing solution for creators to understand their fan base and grow their fan base. It gives them all the tools they need to continually build upon the fans they've found and keep on finding new fans. This idea came to us after spending the last 6 years in the music industry, solving this exact problem for major labels and major label artists. What we realized is that the point of sale for most creators has increasingly become digital. And as we go into a world where everyone is becoming a personal brand owner, everyone is becoming a personal kind of creator in some sense, the competition for eyeballs is increasing very heavily. And so a lot of creators are now moving to paid marketing to try and find ways to continue growing their fan base. It's become easier and easier than ever to make content and distribute content. But in a world where, you know, we can record this video and have it out on YouTube tonight or have it out on Spotify by Friday, the biggest problem, the biggest kind of issue of most creators face is how do you cut through the noise? How do you consistently keep on finding new fans and growing your fan base? The tools for yesterday that most small businesses use to market themselves aren't applicable to today's creators and today's creator small businesses, if you will. The average creator tends to be on TikTok, they tend to be on YouTube, Instagram, Twitter, sometimes Spotify, sometimes Apple Music. There's 20 plus platforms that the average creator tends to interface with, depending on the type of creator they are. But the tools that are built to help with marketing aren't really built for these types of goals and these types of outcomes. And as the number of creators continues to grow over the next decade or so, the competition for eyeballs is only going to increase, and more creators are going to try and find ways to continue cutting through the noise and continue finding new ways to market their content to new fans. What Symphony does is it brings together all the tools a creator really needs to continue growing their fan base consistently. We've built out integrations with every social media ads platform. So at the push of a few buttons, a creator can launch a campaign to run Instagram ads to drive streams, run TikTok ads to grow followers, run YouTube ads to drive subscribers. They can go on Symphony and they can track their entire fan base from one dashboard. Not only the growth across their platforms, but also the demographics information as it relates to each of their fans across each platform. And they can collect emails, phone numbers, data directly from their fans and own that data so they can reach out to them whenever they want to at their own whims. We launched in private beta around 6 months ago. We've already onboarded around 2,000 artists and creators onto the platform. They spent $100K through our automated marketing tools in the last 4 months alone. And our retention is very strong. We're seeing that if an artist or creator goes and submits, say, an Instagram ads campaign through Symphony, around week 8, half of them are still around, which is a very, very high retention rate for most software platforms. We've also been growing very quickly in the last few months. It's been 30% growth consistently. And as we're really looking at next year, the next 5 years, the next 10 years, we want to become what HubSpot or Salesforce was the last kind of generation of small businesses, but now for this new generation of business, which is folks making content and making a living out of their content. That's Symphony. Appreciate it.
That's awesome.
Thanks.
Thanks. I'll go first since Eric, you've been doing all the leading the charge here. This is really cool. Thanks for sharing. I'm curious. What kind of creators do you go after? Obviously, you've worked with some really big names in the industry. Are you going after creators at that scale, or are you saying, hey, I'm really looking for the person who has 15,000 followers on Instagram or 10,000 followers on Instagram? What's your target market?
It's the latter of the ones that you mentioned. I think if you look at the bigger creators in every category, right, like the artists, even like the Mr. Beasts of the world, the biggest TikTokers, they tend to have teams and management companies that might have marketing in-house. So we're going more for like the long tail and quote unquote the middle class of creators that's kind of emerging through these platforms. That's where really the volume of people are. That's where the millions of creators are kind of at. And they're looking at the Mr. Beasts and the SZAs and all these folks aspirationally trying to get there, but they tend not to have the tools to get there. So that's what we're trying to attack with the product.
Mike, this is cool. Thanks for the presentation. One thing I'm trying to sort of wrap my head around, don't most creators want to grow organically? Like spending money on ads is like is a niche act. Like some of them might do it some of the time for maybe some of their accounts, but don't creators primarily need to grow organically? They just don't have the money to invest, thousands or tens or hundreds of thousands in growth. The people who have the money are the brands, right, who are paying for these ads. I think the aggregation part of your platform's cool. The dashboards look cool. But I'm curious, like, are you running into this sort of feedback with creators where they're like, well, yeah, paid ads are cool, but can you also help me grow organically?
Yeah, it's a great question. I think the aspiration for every creator, whether you're an artist, TikTok, or YouTuber, or whatever, is to grow organically. But the reality is very different from that aspiration, right? The algorithms consistently change over time. If you asked a TikToker 6 months ago, would everyone paid marketing? They'd probably say no, because it was very easy for them to grow their fan base. Now, a lot of TikTokers I talk to tend to boost their posts or just tend to put $20, $100 to market their actual posts so they can actually cut through the noise. And so as all these platforms kind of converge to a place where their algorithm gets more oriented around less organic and more driving folks toward paid, we're seeing this trend emerge where creators, artists, TikTokers are willing to spend money behind their content to get it out in front of more people. The average campaign on Symphony is actually only $150. And these are artists that are, in some cases, they have 10,000 monthly listeners or less. They're making less than $50 off their music, but they're seeing the value of investing in their music, investing in their content to find new fans. And I feel like that convergence is only going to get deeper and deeper as more creators come online.
Thank you.
So how do you automate the ads and push it out all together? And what are you, I guess, getting insight-wise now that you've run all these different campaigns?
a lot of work, a lot of deep work in these documentation platforms for TikTok, Instagram, and all of that. We spent at our agency, we spent a lot of time automating this for ourselves, our agency. It helped bring our agency to like a multi-million-dollar run rate. But it's a lot of just on one end, knowing how to run ads depending on the goal of a creator, whether it's streams, followers, subscribers, or whatever it may be. On the other end, we're already aggregating all of a creator's data. And so instead of them having to go in and be like, oh, like, do I target this thing or this country or this place? We already have all their data. So instead of them thinking about even who to target or how to target, they can actually just go in and press a few buttons, and Symphony automatically makes around 500 audiences for them. So it kind of takes away that audience analysis layer that drives a lot of people away from digital marketing and automates the whole workflow alongside the actual creation and analysis of the marketing.
Okay, I know we're at time, so.
No, fantastic. Excited to see where this goes from here. And last question is, how big do you think this gets? I know you had a TAM slide, but Ollie had some great points about the number of creators that actually have the financial resources to pay for this type of service. Like, in 5 years, like in terms of revenue and or other metrics that you'd like to share, how big of an opportunity is this?
Yeah, great question. So the way I look at it is from a very globalized perspective, right? The Western markets are very adept at the idea of being creators. But if you look at places like Africa, you look at South Asia, Southeast Asia, South America, those markets aren't purely online yet. And the reality is a lot of people from these markets will also want to become creators. So when I look at like the next 5 or 10 years, in my mind, there's going to be 200 million people creating content, whether it's TikToks or YouTubes or, music or whatever it may be. And at least 10 to 20% of them will have professional aspirations to reach a certain point where they're making money off that creationism, so to speak. So we're thinking about from the perspective of a world where there's millions of professional creators that aspirationally want to get to a point where they're very large. To your point, not every creator is going to have the budget to go behind it, but what they do have is the ambition to want to get there. And our price point is only $15 a month right now, or 10% of a marketing budget, depending on their tier. And so we're pricing it very aggressively in a place that's affordable for the average creator, even if they're making $2 a month off of their content.
Awesome. Thank you so much. Up next, last but not least, we have Antonio from Crafted.
Thank you.
Hey everyone, I'm Antonio, co-founder of Crafted, where we make Web3 easy and fun. NFTs are revolutionizing the creator economy and businesses across all types of industries. Don't just take my word for it. Let's look at some Web3 current events. Nike did over $185 million in revenue from NFTs to date. Reddit did over $2.6 million in sales on their very first day. And these successes don't just come to giant corporations like Nike or Reddit. Justin Roiland, the co-creator of Rick and Morty, just made over $24 million on his art-based project. In fact, even my co-founder and I, two regular software developers, have done over $3 million selling NFTs over the past year. So we know what people want and the massive opportunity there is for new creators in this space. These numbers are great and all, but there's a reason why NFTs are selling so well. NFTs presents opportunities that we have never seen before, such as creator royalties, token-gated access, truly decentralized ownership, and many, many more. So hopefully by now, everyone is convinced how blockchain technology can change our world. But there's a huge problem. Getting started today is extremely difficult. Companies and artists don't have the resources or expertise to even begin thinking about a Web3 presence. Not to worry though, we at Crafted provide a fully end-to-end solution for complex blockchain applications such as NFT generation, staking, tokenomics, blockchain-powered storefronts, and we make it as easy as filling out a form and a click of a button. We're also developing fun new ways to onboard new consumers into the NFT space by selling NFT booster packs. Yes, like Pokemon cards, but digital. So who's ready to empower everyone to participate in the world of Web3 with us?
Terrific. Thanks so much for sharing that. Anyone like to jump in?
Sure. I can start. Antonio, this looks cool. But as an investor, I am still struggling with the hangover we have from all the things blowing up in the crypto space, and Web3, and this week in particular has been bad week. NFT volume seems to be down very significantly since last year. If you look at stats from OpenSea and some of the on-chain stuff, right? Like, I don't know, down 95% or something. How do you think about this sort of challenging macro environment and like what you guys are doing? Are you seeing traction, or sort of do you have a unique go-to-market that sets you up for success in this sort of challenging environment?
Yeah, absolutely. So I think we were in a bubble. So 6 to 12 months ago, the NFT market was filled with these so-called degen projects. And these are usually projects that are built anonymously and usually not taken too seriously. And what tends to happen is these NFT values will skyrocket and then they'll just kind of dump down really quickly. But I think right now it's actually a good thing for our space now with all these new bad news, is because we're kind of taken back to reality. And we're seeing kind of more serious creators and Web2 brands that want to understand the real value. And so I think we're positioned to actually onboard these kinds of this kind of demographic, these real serious Web2 brands and artists. Whether that is to be positioned to create soulbound tokens for digital identities, or really just art collectibles digitally.
Building on that question from Ali, I'm curious, who are you targeting going forward with this? Is it for the degen community, the people that have red pilled? Is it for sort of big Fortune 400 brands? Is it small businesses? Is it independent creators? Who are you targeting?
Yeah, great question. I think our software is quite versatile, so it actually does probably encapsulate some of those degen projects if they want to use us. But I think the software is positioned to be more tailored towards these artists, these creators, and Web2 brands.
That's great. Maybe building off of Eric's question as well. What's the sales strategy currently? How do people find you? How do you find people?
Yeah, so right now we're still in the product development stage. We have 2 services that are live that are more targeted towards existing NFT projects, specifically the staking and blockchain powered storefront. So far, the way we've been reaching out to customers is pretty much cold outreach. And we've since onboarded about 20 NFT projects and have done just shy of $10,000 in revenue over the last 7 weeks. And I think moving forward, we're going to be, continuing to reach out to some of these Web2 brands and creators and kind of giving them a good strategy to enter the Web3 space.
Got it.
Oh, you're muted.
Antonio, I'm curious. So you and your co-founders, 3 million revenue today. Can you talk about your success so far and how did you get there?
Yeah, it all really started with the curiosity with the technology. And fortunately, we kind of launched at a good time. So I think one thing that we kind of understood that most others probably didn't at that time was really just shining the light on the actual applications of blockchain technology and not just kind of throwing up a JPEG and selling that. And we actually explore some of these new trends and we keep up to date with those new trends and thus the NFT staking and marketplaces. And I think these trends keep evolving and it's about just kind of staying up to date with those trends.
Thank you.
Awesome. Well, thank you so much, Antonio. And thank you so much to our 4 panelists. This was Gold House's first ever demo day. We hope everyone enjoyed it. And thank you all so much for taking the time.
Great job, everyone.
Thank you.
It was a ton of fun.
Thank you. Thank you.
Have a great day.
Thank you, Zara. Great job running this.
Fantastic.
Thank you. I appreciate it.
Drill sergeant.
I've never seen we've never seen a demo day run this well, like on time. We've done hundreds, but this is impeccable time.
Zara's not shy about telling us to shut up. Stop asking questions. Move on. Yeah.
Thank you all so much.
Great. Take care, everyone.
Bye.
Bye.